This is a download from BFM 89.9, the business station.
Good morning, Dodge. In the latest jobs data that was released, only 126,000 jobs added in March, which is a disappointing number. How much did the strong dollar have to do with this?
Good morning, Julian. Well, it did have a significant impact, and the Federal Reserve's not so benign the neglect, actually, of the dollar strength is definitely an issue, and that is one of the main issues that we're facing. Currency, and talking about foreign exchange, currency really is a zero-sum game. Central banks have obviously needed to do a lot of heavy lifting and as an offset to what individual countries have been doing or not been doing because of their dysfunctional fiscal policies that have been focused more on kicking the can. If the Fed focuses on a rate exit, while the Bank of Japan and the Eurozone Central Bank pursue pure devaluation strategies as a means to boost their economies, there will be a near-term cost to the United States. Now, looking at it from a hedging and from a commodity and foreign exchange perspective, the change in the euro-dollar, U.S. dollar currency cross, when you advance it by 1 year, you will see that what is being implied is that the U.S. nominal GDP will advance about 1% slower than the Eurozone GDP growth sometime this year or next year. The markets are not expecting this, as it implies more incremental inflation and real GDP growth in the Eurozone rather than U.S. If this delays Fed rate hikes and all the major capital economies achieve some sort of escape velocity, then perhaps everything will be fine and policy strategies will be worth it. They'll be successful. But for now, we're continuing to see the reaction to this possibility, this great monetary experiment that we've been going through, and the dollar has resulted in the S&P really being flat year to date. There is a concern over the longer term that this will continue to have some negative pressure on our markets. So this probably is the most important impact of what's been going on in terms of our economy and employment numbers.
So there is obviously going to be this interplay of currencies. How is this going to be given the right treatment by Janet Yellen? It's obviously going to complicate things for her.
Yes, it will definitely complicate. Obviously, the Fed has now less confidence that the economy is ready to endure the policy liftoff as early as June, is what we were expecting. In particular, she's going to have to watch the labor force participation rate, the LFPR. That is much weaker than we expected, and that really needs to be improved before she can really start the process, start lifting rates. If you take a look now at euro-dollar options, and we're looking more at the euro-dollar reaction as opposed to the U.S. dollar, euro-dollar options are now placing the odds of a Fed rate hike this year under 50% and a move by March 2016 at only 55%. So I think that she's going to be less willing to start the move, and she's going to be much more attuned to what's happening economically, and really she's going to have to see the economy, particularly the labor force participation rate, start to prove that it's ready for the change. It has to prove itself first, and that's going to be more important for her than to be on top of it and to accelerate the increase.
Now, you mentioned the labor force participation rate, and that's a pretty ugly number. It declined by 0.1% to overall 62.7%, and that means that 62% of the people in the United States don't have a job, and this is the lowest level since the 1970s. How much of a factor is the participation rate in economics?
Well, Julian, it is important for two things. Number one, if you're not employed or underemployed, you're not as likely to increase your consumption, your purchases, in line with the improvement in the economy overall. So that's one thing. Number two, it means that there's an underemployment, and you have to take a look at the age groups. And right now, what we're seeing is that the younger generations, XY, are really facing this much more than the older generations, and that's the future. And Julian, we're really losing a whole generation to this. and that's not good for the long term. So the impact is definitely going to be felt longer term. Right now, it is a pretty big factor for Yellen. She really has to see this improve. And the currency is also the other thing. Those two together are going to be very volatile, and they're going to be intertwined and interchanging in terms of their importance and relative weight. Yellen's got a tough job. She's definitely got a tough job, and it's more likely she's going to hold off until the economy proves itself, and that's probably not going to be till the end of this year or maybe even next year.
So we have the prospect of Yellen delaying interest rates, and we also have the prospects of poor first quarter corporate earnings. How do you think the market will play this out?
Well, we're going to watch earnings. There could be some positive surprises, and what we're going to do, which is a little bit unusual, we're expecting to have some positive surprises in home builders, auto parts, food, hotel, retail, solar, and some financial issues. If we don't get those, that will be more negative than expected. In the home builders, we're watching Toll Brothers, auto parts, AutoNation would be good. Retail, we're watching JCPenney, Macy, and Skull-Daddy. Those are the ones that we expect to have a pretty positive report. If we don't, that will be more negative than the actual facts, the actual reports. On the negative side, we do expect some negative responses in airlines, particularly Delta, and railroads, air and ground freight, also some industrial stocks. So if we see some less negative or perhaps positive reports, that would be much more positive. So we're going to be reacting more not to the actual performance that we're going to be seeing, but the performance relative to what we're expecting.
Thank you. That was George Dolan, Chairman and Chief Investments Officer for Lander & Fust Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.